At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, January 5, 2023, is the Mullen stock short squeeze already over? The cost to borrow fee for Mullen stock has declined significantly, although it still remains elevated. Mullen Automotive's cost to borrow fee has declined to 116.87% from a peak of 742.53%. Furthermore, it appears Mullen is currently in the process of a short squeeze. Shares of Mullen stock are up by more than 50% in the past 5 days. Shares of Mullen Automotive, Nasdaq MULN, are resiliently up by more than 8% today, while both the S&P 500 and Nasdaq 100 are down by about 1%. Meanwhile, the cost to borrow fee of Mullen stock currently sits at 116.87%, down from 379.78% compared to yesterday. The cost to borrow fee peaked at 742.53% on January 3, rising more than 8,000% from the figure of 8.55% on December 23. According to The Street, the common range of borrow fee rates is 0.3% to 3% per year. However, when there is high demand for a short sale target, it's not uncommon to see borrow fees exceeding 20%. Based on the most recent data, Mullen carried an elevated short interest as a percentage of float of 43.5% on December 15. That's equivalent to 161 million shares shorted with a value of $50.59 million. A high cost to borrow fee and short interest factor well into the argument for a short squeeze. As short seller demand increases, lenders must charge a higher cost to borrow fee for shares. At the same time, short sellers who already own a short position may cover their position due to the high fees. This could ultimately lead to a higher price for the electric vehicle stock. Meanwhile, shares of Mullen have increased by more than 50% over the past 5 trading days. So, is the short squeeze already over? Is the Mullen stock short squeeze already over? It's difficult to predict when a short squeeze has completed. Based on today's price action and relative strength, it appears the squeeze is currently in process. Meanwhile, Mullen has catapulted itself into meme stock status during the past year, which implies positive retail sentiment. A short squeeze and retail buying spells higher prices for Mullen. At the same time, Mullen has undergone heavy dilution in the past year. With more shares on the market, the effects of a short squeeze will be reduced and harder to achieve. What's more, authorized shares could increase to 5 billion from 1.75 billion pending shareholder approval at Mullen's special meeting of stockholders on January 19. In the end, investors should invest in companies based on solid fundamentals and a plan for long-term success and not on the prospects of a short squeeze. Whether Mullen stock satisfies those conditions is a conclusion that should be made by the individual investor. Dear Mullen stock fans, mark your calendars for January 24. Mullen stock investors should keep their eyes on this catalyst. Investors in Mullen Automotive stock have seen gains of 14% today. This move comes as retail investors appear to up their bids for shares of this highly shorted stock. An upcoming securities purchase agreement for preferred shares on January 24 also appears to be on investors' radar today. Today's otherwise bumpy market does have a few winners to note. Investors in Mullen Automotive are certainly in a positive mood today, with shares of the electric vehicle maker skyrocketing. As of this writing, shares of Mullen stock have surged more than 14% on what appears to be short squeeze interest. While the company's cost to borrow has come down to only 80% as of yesterday, it's clear that retail traders are not out of the game yet. Interest remains high around this stock, which is now down more than 90%, and that's after today's rise. That said, there is another big catalyst on the horizon. As Investor Place assistant news writer Eddie Pan pointed out in a recent piece, there's a $90 million potential catalyst on the horizon for Mullen. As it so happens, this catalyst is set to take place in less than 3 weeks. Let's dive into why investors in Mullen stock should circle January 24 on the calendar. What's driving Mullen stock higher? Short squeeze interest in any stock is a big enough near-term catalyst to focus on for most investors. However, it's Mullen's upcoming $90 million payout of preferred stock over first quarter that has many investors excited. Essentially, as part of a debt-to-equity swap undertaken last year, Mullen amended its securities purchase agreement to include convertible notes instead of preferred stock and warrants. That said, a second amendment of this agreement stipulated that $90 million will be paid out to investors in the form of Series D preferred shares on January 24 and February 24. According to the most recent amendment, investors will be able to purchase these preferred shares at a price no higher than $1.27, with a floor of 10 cents. Accordingly, demand for Mullen stock may increase in the coming weeks, depending on the number of investors looking to take part. Overall, it appears clear that Mullen remains a highly speculative stock in a rather difficult economic time. Investors will have to wait and see how this stock performs from here. That said, this is a catalyst investors should keep an eye on moving forward.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.